It's going on, everyone. About 75% of stocks in the S&P 500 closed down in the red today, and we're starting to see some areas of the market really start to pick up and move in some pretty exciting ways. We have one more trading day left for the week, so let's make it a good one. And besides that, Tom, we have a lot to cover today and some pretty interesting stats to go over as well. So let's jump right into it.
Yeah, as you can see by looking at the SPY this week, it has not been the best week out there for the S&P 500, and this morning it was pretty much a spitting image of yesterday morning. We tried to mount a comeback, and traders just couldn't get the job done, right? The buyers just could not beat the sellers today, and the SPY ended up actually dipping under 549 and 550 today, which was a pretty bad sign. And around market close, it started to bounce there again. So tomorrow's going to be a pretty crucial day to see if we can, continue rejecting down under here or not. And Mike, I know that, right off the bat, so there was some pretty big news that came out towards the end of the day yesterday involving the yield curve. And I know that the yield curve has been inverted for quite a while, and it's been freaking traders out. So I know some people are like, hey, it's uninverted now, but I don't know, Mike. This data is pretty striking to me here.
Yeah, so when you hear about a yield curve, it sounds complicated and boring and irrelevant, right? But this is actually very important because essentially what we had happen over these past couple of years is that we were seeing an inverted yield curve. So like, for example, you could get a higher percent return by investing your money into, let's say, a 2-year bond compared to a 10-year bond. That does not make sense, and it's whack, right? We'll put it that way. For example, a 2-year bond might pay, let's say 5% interest, while a 10-year bond might pay 4%. It doesn't really make sense. And the yield curve was actually the longest inverted yield curve in history, and that is now over. Basically, what we can see on the chart right now is the yield curve is finally flipping back to normal, which is at least kind of good. But the bad news is that a lot of times events like this one is closely followed by a recession. As we can see on the chart, those gray shaded areas represent recessions in the United States. What you can see is that when the blue line finally pops back above the red line is when the yield curve, flips back. And you can see, like, let's say in one of the most recent examples in March of 2007, the yield curve flipped back and a recession began 10 months later. And then in December of 2000, the recession began 4 months later. In June of 1989, the recession began 13 months later. In 1981, the recession began 2 months later, and so on. The main thing is that, it's good to finally see a yield curve come back to normal, but historically, this has been a very clear warning sign of recession. So take this how you will, but it's important.
It really is, Mike, and we're going to be talking about recession and et cetera a lot here over the next couple minutes, of course, because we do have some pretty big jobs data coming out tomorrow as well. But I know that this has been kind of, what's been the big fear in the overall market, right? Traders have been kind of worried about this, and I think that that's part of the reason why the SPY is selling off the way it is from the top. It's not just, oh yeah, we're double topping. Oh yeah, Nvidia's overextended, right? I don't think it's just that. I think that there's also a big combination of, hey, the economy is deteriorating a little bit. We've been seeing jobs numbers getting a little bit worse. And, now we're talking about the Feds potentially doing 50 basis point rate cuts. And I don't know, Mike, people have been trying to hedge their bets quite a bit in the short term as well.
Yeah, and like when we look at the market, it's still very close to its all-time high in the grand scheme of things, but it's certainly not all sunshine and rainbows. There are some serious risks going forward to the economy, and I'm sure that that's not a surprise to many people. Like you mentioned, the jobs market's definitely struggling quite a bit, and just the economy as a whole just isn't as strong as many would hope it would be, right? We'll put it that way. But one thing that I thought was very interesting is that over the past couple of weeks, we've been touching on nonstop how September is a historically bearish month for the stock market. It's actually the most bearish month of all months. But what's interesting is that when we look at the skew index right now, you'll see that traders are already protecting themselves, and this is a very important warning sign. Essentially, what we're seeing on this chart is the CBOE skew index. The higher this goes, I guess you could say, the more demand for market protection there is. We can see right now it is at its highest level in over, let's say, 25 years. This is important because when you see this ticking up in a major way, that directly tells you, in essentially plain English, that people are buying put options like in order to protect themselves. And the good thing is that data like this is more of like a real-time indication of investor sentiment. Sure, it's great to look at, let's say, historical market stats and look at, like, let's say, what happened in the past and what investors did in certain scenarios, but in real time, we are seeing investors actively, buying put options and doing other things to protect themselves. And this is a completely, rational decision in today's market, not only due to, let's say, the economic situation at hand, but also the upcoming election and the historically bearish Septembers. And then also the fact that valuations are somewhat aggressive. So I think between this skew chart as well as the, I guess you could say, inverted yield curve chart, there's a lot of very important warning signs to take note of before the storm comes along.
Yeah, exactly. And, people have been kind of worried about this financial recession coming here over the past couple months and even the past year or so. A lot of people have been predicting that it would happen in 2024. I'm not sure it's going to happen yet in 2024. It might happen more in 2025. And I've seen some of the bigger banks and different analysts and stuff looking even more at like a higher chance in 25. So, let me know in the comments whenever you guys think it'll happen. Personally, Mike, I think it's on the horizon. The feds have been keeping things tight for a little bit too long, and now they're going to have to loosen that policy up a little bit. So all right around the election, right? They picked the perfect time to do this, of course. And one other interesting thing, just tying into everything here, is I noticed the 10-year yield's been falling down quite a bit too, I guess in anticipation of some of these cuts coming up. So that is a good sign. Maybe we'll see actually mortgage rates start to drop for a while, Mike, and housing will start to explode again.
We shall see. But like you mentioned, we have some, serious rate cut potential coming up for multiple reasons. When the economy gets a little bit shaky, the Federal Reserve definitely looks to cut interest rates to, spur economic growth again. And what's pretty interesting is that, we're already a couple days into September, and we're expected to see our first rate cut on September 18th. And we're expecting right now, or at least the market is pricing in, a 59% chance of a 25 basis point rate cut, but also a 41% chance of a 50 basis point rate cut. So, we're expected to see rate cuts pretty soon. And, Jerome Powell is going to attempt his soft landing with this economy. We'll see if it works.
The soft landing, right? He might have to reopen up the money printers to get a soft landing. No, I'm just kidding, guys. Don't flame me in the comments for that one, I promise. But looking at the data for tomorrow, Mike, I mean, there's actually some jobs data coming out tomorrow, and there's a lot of people out there that are saying it's going to be huge. I mean, whoever wrote this article at CNBC, I guess Jeff Cox, is saying it's one of the most important economic releases of the entire year. So it's going to be big, Mike, and we're going to have non-farm payrolls reporting there. The consensus is showing a growth of 161,000. That'll be a slight decline in the unemployment rate down to 4.2%. So that'll be a big event 1 hour tomorrow before the market opens. You guys can see all the numbers here with the consensus and the forecast. So that's pretty much what they're looking like, Mike. And let's say pretty much here, if the data shows that jobs are slowing down at a larger pace, the big thing is that people are thinking that that'll end up pushing the Feds closer to that 50 basis point cut. So I'm really going to be watching the Fed Watch tool tomorrow morning to see if we, do actually flip to that 50 basis point cut there.
Exactly. And just like you said, and even the person who wrote the article mentioned, a big reason that this economic data release is so important is because it tells the Federal Reserve, like, what the situation is actually like. Like, if we see the jobs market slowing down worse than everyone expected, that tells Powell, you better get to cutting those rates or else there's going to be a problem soon. So I thought that was pretty interesting, but I also like the fact that we're getting this data release before the market opens tomorrow. So it's not like we have to wait around, let's say 30 minutes after open or anything like that, waiting for this economic data. Like, we're going to get the data before the market even opens, and that'll kind of set the tone for the rest of the day. So that's definitely good there. And then on another note, Tom, going into tomorrow, I know a lot of traders had some close eyes on ticker symbol AVGO as they reported earnings after the bell today, and it's looking pretty rough.
It definitely is, Mike, and that after-hours chart is getting bloody here. Pretty much, I was looking at the lows. It was down like around 5% there, or actually 6.8% it ended up getting to as we went forward. Now it's sitting right around that 5% mark, so pretty big drop by them, Mike. And I will say the earnings weren't necessarily bad for AVGO either, but it was mixed. So it looks like they actually beat revenue, they beat EPS, but then at the same time, their Q4 outlook wasn't the best there. I did see some positivity, though, where they are now expecting a little bit more of AI revenue this year. They were expecting 11 billion. Now they are expecting 12 billion. So I don't know, Mike, very mixed earnings, and traders are definitely not taking a liking to it. That's for sure. And, you know, with some of these tech stocks that are so high in price right now, some of these earnings have to really wow. And I just think that these earnings didn't really have that wow factor there.
That's the thing. And AVGO is, very important because they're actually the 10th heaviest weighted company in the entire S&P 500. And the main thing I'm taking away from this earnings release is not only that their earnings were not, let's say, mind-blowing, but also the fact that we are just seeing big tech stocks and even big chip stocks selling off even though their earnings aren't, let's say, bad by any means. For example, NVIDIA reported earnings just the other week, and look how that stock's doing. It's certainly not doing the best. And again, their earnings were not bad. Like, they were, by money metrics, actually pretty good. So with that being said, what we're seeing right now are, in many cases, at least decent earnings, but falling stock prices, which, just screams negative/bearish investor sentiment. So essentially, like, that is a big warning sign, because if we saw the same earnings that we saw with NVIDIA or AVGO recently, if we saw that a couple months ago, these stocks would be up 15% in after hours. But look what they're doing now. So it tells you a lot about investor sentiment. And what's worth keeping in mind is that investor sentiment isn't something that, let's say, flips on like a, day-to-day basis on like a massive scale. Like on a much broader sense, like investor sentiment is something that, can take like weeks to months at a time, or just like a substantial event to change. And again, I think we're seeing a lot of profit taking and just de-risking ahead of a historically bearish September, as well as the upcoming election. And, I can't really blame traders for doing that, especially considering how aggressive valuations are.
Yeah, exactly. And the SPY's sitting like right at that all-time high. I mean, if you could pick a better resistance to hit going into September, I don't think I could have single-handedly picked a better one, honestly. Like, it is one of the best resistances out there, right? Being that all-time high in that previous peak. And, we're seeing a pretty good rejection coming in there. Now, I will say with AVGO, with this earnings, it's a pretty big negative to see this 150 mark break down. I'm definitely not a fan of that. And I'm going to be looking for a bit of an earnings continuation play on this one over the next couple weeks to the downside. We go to the daily chart, they're actually still up fairly high, and some of these pullbacks that we're seeing, Mike, are getting pretty accelerated. Like, look at SMCI, the way that they've been pulling back over the past couple months. This might be like foreshadowing some of these more overpriced tech stocks here.
No doubt. All right, Tom. So looking a little bit more specifically at SPY, it's at a crucial point right now, and it's making lower highs. What are the key levels to keep on watch for this one for tomorrow?
Man, people are probably sick of hearing this right now, Mike, but the 549.50 to 550 is once again on watch. It's been stuck here for like 3 straight days now, so we really need to see a continued rejection off of that level and move lower tomorrow. It would be amazing to break below the low of day today, right around 547. That'll be a big first target. Then I'm watching 546 and 544 just underneath there to the downside. But we need to really stay under 550. If we end up ripping back above 550, there's been a pretty good resistance over the past couple days, right around 553.75 to 554. 555 and then 557 and 560 overhead if we do end up getting that recovery. But I don't know, Mike. The SPY's been stuck here for a couple days now. We better finally get some good directional movement out of here.
There we go. All right, well, with that being said, let's jump right into some setups and predictions. A stock I'm watching very closely right now is GLD, and it is to the upside. For those of you who don't know, GLD follows gold prices, and it's getting closer and closer to record highs yet again. Gold actually just broke record highs just the other week, and it's trading over $2,500 per ounce. Gold is an area of the market that investors have historically flocked to in times of fear and uncertainty. And again, not only because of the record valuations, but also the historically bearish month of September, plus the election and all the other craziness going on in the world right now. There's many reasons why investors would flock to gold, and we've been seeing that pretty clearly and consistently all year long. So as we look at GLD, it's once again getting closer to a brand new all-time high. It has not officially broken out yet, but this is why I'm talking about this now so we can get like a head start on it. Basically, if we start to see GLD move in a bullish way where it's actively putting, strong pressure on its high of day, that's going to be a great sign to see. And, when gold and just assets in general are ripping past all-time highs, they get even more media attention and hype, which brings even more buying pressure into them. So either way, I definitely like the bullish setup on GLD in the short term.
Yeah, it's starting to get right back to that big resistance at that all-time high. It'd be beautiful to see a nice breakout here, especially with the SPY starting to double top. Maybe people will run into some safety here. With my first play, I'm looking at NIO to the upside. They actually had some earnings today, and they did a lot better than Broadcom, to say the least. They're up 14.39% on the day. They're almost back to $5, but I'm really looking for a breakout of that after-hours high right around 487. Then I'll be watching 5 and just seeing how the momentum is. The momentum on this stock is very strong right now. I know there's a lot of people looking for a good earnings continuation play on this one, and whenever you go to the daily, it's a major support that this stock has been holding down around $3.85 to $4. So that has been a great sign so far, a great move. And, whenever this stock has bounced off this support in the past, it's continued up for multiple weeks in a row. So I'm really looking for a bigger continuation out of this one.
Sounds good. Yeah, that stock is starting to gain some good momentum, so I will also keep a close eye on that one. Another stock that is definitely on my radar is Netflix, and it is in a bearish way. I talked about this one in yesterday's video, but basically there's a lot of overhead resistance, and the stock is actively showing more signs of weakness. It's not in full panic mode just yet, but it's definitely struggling to hold these levels, especially close to the $700 mark. When you combine that with the, historically bearish month of September and the increasingly bearish investor sentiment that we are seeing not only across the market as a whole, but especially big tech stocks, that makes for a pretty good reward to risk skew playing Netflix to the downside. So either way, Netflix is on my bearish radar in the short term, and it would be phenomenal to see this one break below that like $670 area again. But as long as like the price action is moving in a momentum filled way to the downside, I definitely see opportunity with it.
Yeah, I do too, Mike. I feel like the past couple days on a couple of stocks here have just been kind of like a dead cat bounce, setting up for like a little bit of a larger move here to the downside. I'll definitely be looking for that 670 area to possibly break, and even a couple other areas from the past couple days as well. But with my next play, I'm going with SQQQ. We're still waiting for the market to have that good breakdown, right? SPY started it today. I actually really liked the bearish opportunity on SPY today, and the bullish opportunity. For anyone that was on the live stream this morning, there was actually a pretty good trend line on SPY that it was following to the upside, and there was a lot of people that ended up having a lot of good bullish plays this morning. But as the day went, we started to see that big support of 549 to 550 truly give out. So for tomorrow, if we just continue to see the SPY rejecting off of this area, I'm going to look at SQQQ and SPXS to the upside. Those are two stocks that will move up if the overall market falls. SPXS follows the SPY a little bit more directly, where SQQQ follows the NASDAQ a little bit more. But these stocks, whenever the market falls, they can have some pretty crazy runs. Like just earlier this week on Tuesday, SQQQ on an intraday basis ran up like almost 8.5% there.
Sounds good, and I think we're set for another exciting day in the market tomorrow as well. But besides that, let's jump right into today's momentum plays. And with the first one, we have SMCI to the downside.
Yeah, poor SMCI. They just can't get anything going. And, even the market's been kind of flat the past couple days, but SMCI keeps posting these 2% red days here. If they re-break under 407, I'll keep watching them down.
All right, with the next one, we have BYND to the upside.
Beyond Meat, pretty good movement today, up 4.37%, kind of bouncing on support. If they're able to break above $6.20, I'll be looking at them up.
All right, and then with the last one, we have ABBV for both directions.
Yeah, AbbVie starting to fall off a bit in the short term, down 2%. If they end up breaking under 192, right around the low of after hours here, then I'll keep watching them to the downside. If they end up re-breaking back above pretty major resistance at 194, then I'll watch them back up.
All right, so we have the upside level for a potential move higher. We have the downside level for a potential move lower. This is for AbbVie. Don't forget about the upside level with Beyond Meat, and then the downside level with SMCI. Either way, these three stocks are on watch for potential day trades tomorrow. We are looking for strong, consistent, powerful movement and strong momentum. If these stocks break through the levels Tom listed, that is where the opportunity is. If they do not break the levels listed, do not force the setups. Again, we're looking for strong, consistent momentum here. But besides that, Tom, we are all clear for today's $499,000 big money trade, and we are looking at ticker symbol ZBH. This is not necessarily a popular ticker symbol, but basically the big money is betting big that this stock has more downside. Essentially, they bought the 100 strike put options that expire on October 18th of 2024. This stock has been pretty weak, not only in the short term, but honestly just like over the past couple of years. It has actually been stuck in this range all the way since 2015. So this stock has been pretty disappointing, we'll say that. But basically, the $105 area has been a major support area over the past couple of months, and it has just broken below that level. These 100 strike put options are a little bit far out of the money, which is definitely a slight concern of mine because it will decrease the probability of these options actually expiring in the money. But in the event this stock continues to flush, which the market seasonality definitely helps that case, these put options can do pretty well. So either way, ZBH will definitely be on my radar over these next couple of weeks, and honestly, like the next couple of months or so, because these options have all the way out until October. But yeah, this one has been pretty rough lately.
Oh my gosh, Mike. Yeah, right down to that 100 strike. And that'd be pretty nice to test 100 in the short term. The puts would probably pop off pretty well, even just getting to there. So that would be a nice thing to see a test of. Of course, this support is major. I mean, going back to 2015, like you said, I can't believe that this support has been, or it had this many bounces on it. I don't want to say it held up because, in 2020, we had a pretty big breakdown of that area. But, pretty much every other time that this stock has been around this level, it's chopped right back up towards the top of this channel here. So I don't know, Mike. It's definitely an interesting play. I'm going to be targeting that $100 mark in the short term. And if it breaks 100, that would be even better. But I think that'd be a good first target. And yeah, it's a very interesting big money play, right? We don't get ones all the time that come after such a crazy drop like we saw today.
No doubt. So either way, keep this stock close on your radar going forward. But I hope you guys are ready for an exciting day in the market tomorrow. SPY keeps trickling lower, and we're starting to see some pretty exciting but also interesting signs. Not only with the skew index at basically, let's say, 25-year highs, but also the fact that when we look at some of these leading big tech stocks in the market, like Nvidia or Microsoft or even like AVGO today, they are moving in big, volatile, crazy ways, and this will have a direct impact on the market as a whole, but even more importantly, the sentiment associated with it. So let's make sure to especially trade in a smart, disciplined way going into tomorrow. In these next couple days, there's going to be a lot of great opportunities presented, not only in the short term, but even throughout the rest of this year. So let's make sure for any trades that are entered, there are stop losses in place and that those stop losses are protected. Let's make sure to follow the money and trade in a smart, disciplined way. If there's not any good opportunities, don't feel the need to force a trade just for the sake of trading, because that's certainly not a good habit to have. But I'm pretty excited, and I really hope all you guys are as well. If you guys are new to the YouTube channel, consider obliterating that subscribe button to get our videos recommended to you more often. In every single video, we cover the most important news, information, and events that you need to know about, whether it be some events like the jobs data for tomorrow, AVGO earnings from tonight, the inverted yield curve, or even big money plays. When you subscribe, you'll know everything you have to know about the market, so consider joining the Stocked Up crew by doing that. But we also want to give a giant shout out to today's member of the day, Kristen, who's just a great member, especially with the Stocked Up live stream. So huge shout out to you, Kristen, and thank you for all you do.
Yeah, thanks for always being there, Kristen. It's awesome to have you there every morning, and you are one of the most consistent viewers of the live stream. And if you guys didn't know, I go live every morning when the market opens on the Stocked Up Live YouTube channel, so make sure you check it out there. I go live about 10 to 15 minutes before the market opens.
Absolutely. And then if you guys are into short-term trading, definitely check out that first link in the description in the comments down below to get in on the Stocked Up trading floor. Basically, with this, you get access to everything you could possibly need as a short-term trader, whether it be these big money plays, our weekly live events, our custom bots. You can chat with Tom and myself all day long and access the technology and software that we've been developing every single day for years now, and does pretty well. So definitely consider getting in on the action. We still have the 100K subscriber special coupon still running. Coupon code 100K saves quite a bit with the yearly plan. Besides that, thank you all so much for watching, and let's end the week on a green note.